In today's video, I want to talk about NIO stock, why it went down today after hours, but I also want to let you guys know that I am adding more NIO shares to my portfolio. And you know what else I'm adding? A new stock. Well, it's not really new, but it did just go public not that long ago. And that is Opendoor Technology. This is a real estate platform company similar to Zillow and Redfin, and why I believe it could double in the next 3 to 6 months. Of course, this is not financial advice, it's just for entertainment purposes only. If I'm right, you're about to get richly entertained. Hey guys, for those of you who are new to my channel, my name is Kim and I make video about high growth stocks and other investing strategies. And if you haven't subscribed to my channel yet, go ahead and click that red subscribe button. Make sure you drop a like on this video if you find it helpful. And I left some links below for some free stocks with Webull. If you deposit $100 or more, you get 2 free stocks. By the way guys, I want to let you know that we are live with our Patreon page. I just want to say thank you to Arjo and Moni. Both of them are my business partner. They helped me get my Discord up and running. We're excited to launch this Patreon page so that way we can help all of you who are interested in investing and trading. We do have over 100 members already, and we're opening up another 150 slots. So right now is the best time to get in. If you're interested in supporting our work, go ahead and check out the link in the first comment below. And I also want to give a quick shout out to Jacob. He is my first Patreon member. So Jacob, thank you for your support. I really appreciate it, man. All right, let's go ahead and get started with this video. Okay, first let's talk about NIO stock, because today on Monday, March 1st, they released their earnings, and throughout the day, the NIO actually performed pretty well. It went up 8.69%, hovering around 49.76. But after their earning came out and they missed their revenue estimate, the stock dropped about 4.14%. Currently, after hours, at the time of this recording on Monday evening, it is at 47.70. And I mentioned this a few days ago, or last week actually. I said that the stock could run up prior to the earnings, and it did. Today on Monday, it spiked up. And if you take a look at the 1 month chart, February 9th to now, it dropped 20%. So since tomorrow will open, we'll see how it reacts. But from the look of it, from the after hours, the stock went down a little bit. Now let's take a look at their earnings, their Q4 earnings. This report just came out, and NIO, their revenue was around $1.02 billion, representing a 149.3% growth year over year. But NIO misses their estimate by $20 million. But nonetheless, their fourth quarter for 2020, the vehicle margin was at 17.2% compared to negative 6% in the fourth quarter of 2019 and 14.5% in third quarter of 2020. And as far as their vehicle deliveries, they delivered a total of 17,353 vehicles. Although NIO crossed over $1 billion in revenue for their Q4 2020, but their sales momentum slowed down to 5,578 vehicles in the month of February, down from 7,225 vehicles in January. The cool thing is that NIO cash balance climbed to $6.65 billion now at the end of the quarter versus $3.3 billion in Q3. As far as the outlook for next quarter, NIO sees Q1 deliveries of 20,000 to 20,500 vehicles, up 421 to 434% year over year, and up 15 to 18% from Q4. For revenue, it is seen at 1.13 billion to 1.16 billion, up about 438% to 451% from a year ago, or up from 11 to 14% from Q4 2020. Like I was saying earlier, I'm actually planning to add more NIO because even though they missed their revenue by a little bit, therefore the stock price dropped a little bit. I don't mind that because I'm in NIO for the long run, and tomorrow I'm planning to add more NIO to my portfolio because it's been down quite a bit, and I just wanted to wait to see what's going to happen to the earnings. Now that we have the earnings, I see still good growth in this company. And also I want to show you guys this because this is one of the reasons why I'm planning to add more NIO and why I'm really bullish about NIO stock. You've seen my previous videos. I mentioned multiple times that NIO will be expanding to a European market. For sure, in second half of 2021, they are going to Europe. NIO ambitious plan to expand overseas could soon become a reality. It could occur as early as this year. NIO is planned to start exporting to Europe second half of 2021. CEO William Lee said during the web conference, CN EV Post reported, citing automotive media outlet bitauto.com. And why are they choosing European first before the US market? Because the European market will be almost a seamless transition, as automotive regulation there are very similar to China's, Lee said. Okay, so short term, as you can see, NIO has dipped quite a bit, but if you take a look at the big picture, they are expanding to the European markets, and soon in 2023 and 2024 they will be expanding to the US. So if you're in NIO for the long run, this is a great opportunity to buy. You're supposed to buy on red days. So we'll see what happened on Tuesday, tomorrow. I am definitely adding more NIO. And quick question, what is your NIO average price now? Comment below. I would like to know your average price for NIO. Okay, next up, I want to talk about another new stock that I'm adding to my portfolio long term. I actually told my group already since January earlier this year, but now I want to share you guys why I'm bullish about this stock. Currently, Opendoor technology, ticker symbol OPEN. It is currently trading at 30.22. Today, the stock went up about 8%. For those of you who do not know what Opendoor technology is, Opendoor Technology Incorporation is an online real estate company based in San Francisco. It takes as-is cash offers to property sellers through an online process, improves and repairs the property it purchased, and relists them for sale. So the current CEO is Eric Wu, and the company was founded since 2014. And recently they went through a SPAC when they go public. I believe it was IPOB. Anyways, let's take a look at the competition really quick because we want to see how it will perform in the future. So take a look at Zillow, ticker symbol Z, the last 5 years. Currently, Zillow is trading at $175.85. Today, Zillow went up about 3.55%. Back in March 2016, Zillow was trading at $24.76, so around $25, right? And if you take a look over the last 5 years, Zillow went up 610%. Taking a look at over the last 5 years, Redfin went up 270% compared to Opendoor. Since they went IPO and until now, the stock went up roughly about 180%. So it has already been trending up. Then the reason why I am really bullish for this stock is because, you know, remote work now becoming normal. People who live in like a city, and you know, it's quite expensive. So people move to different areas, to a rural area, and they can still work remotely, as well as, you know, as more people, you know, have family and get married and have kids, they want to have a home, so they buy house. And right now, since the pandemic happened, you know, people want to have a smoother way to, you know, move in and out, and Opendoor technology provide that service. They even have like a mover. When you buy the house, you can do a virtual tour. It's like touchless, you know, you don't need to contact anyone, and they have movers help the move and everything when you move into the house, and the process is very seamless. I even checked out the app. I download Opendoor app and look through their UI. The user interface is very smooth, and yeah, so far I like it. The only thing is that Opendoor currently, their net profit margin is still negative. For September 2020, their net margin is negative 23, almost negative 24%, and their revenue year over year, it actually went down a little bit. So this is one of the riskiest of the other two that I just mentioned. Looking at Zillow, their net profit margin is actually positive at 5.83. Zillow revenue is at $789 million. And for Redfin, their revenue for December 2020 is at $244.5 million, 5.74% positive net margin. With Opendoor, negative 24, so that's quite big difference. So it is quite risky, but since I'm holding this stock long term for the next 3 to 5 years, I don't mind, getting in now since it's still in the $20, $30 price range. Personally, I believe that in the next 3 to 6 months, this stock could hit $40 easily. Again, this is just my personal opinion. If you take a look at ARK Invest, they put a lot of money into this company. Matter of fact, they actually currently own roughly about 11 million shares of Opendoor technology, and that is in ARK W and ARK F. And this is as of February 26th. So it's not the most up to date. Yeah, this is just a screenshot I found online. So you want to do your own research and look into this yourself. I'm just sharing you what I found out and why I'm bullish about this company. So that is it for this video. Thank you for watching. Don't forget to drop a like on this video if you find it helpful, and subscribe if you haven't already. And I will see you in my next video.